Hey everyone, welcome to my YouTube channel. Dave Ganderel's here. This channel is focused on ways to generate streams of income to create the wealth that you need to attain your goals. If you're interested in that kind of information, please consider subscribing to my channel, clicking the little bell, liking and sharing these videos to social media platforms so we could build our subscriber base. Once I hit 2,000 subscribers, there's going to be a crypto giveaway, so please be sure to be a subscriber. Click the little bell so you get notified when that video occurs and you can participate in the giveaway. Today we're going to continue talking about cryptos, but basically make sure you look in the video description. There will be a timestamp so that you could jump ahead to different topics of the video if you don't have time to listen to the whole video. There's ways to contact me, and there's other opportunities in the video description if you're looking for other ways to generate streams of income. So let's get into the content. So we're going to review Cardano, Bitcoin, Ethereum, and Chainlink. So what I'd like to do is kind of show you where we were and then kind of go from there. So this is where we are. And if you look at my last video, that's where we were. So just to give you a snapshot, we didn't break out of the channel at that time yet. We're in this channel and now we broke out. So let's see where we are now based on the latest price action. So if you consider this a wedge, we could drop down at a little bit lower time frame. Pretty much, this channel has been broken. You can argue that maybe we can come up here, and maybe something like that. And then if we want to kind of and just see where this price can go, we want to, kind of make sure we capture as many hits as possible here. So we want to really just use this this length right here for the target. I mean, you can argue that it's a bull flag, but I'm going to go with a little bit lesser. Yeah, so we could see we hit that target exactly. So the breakout is done. Now it's kind of consolidating back into another little mini bull flag. So what we could do here is we can get rid of some of this older stuff and figure out the latest and greatest. So this is already, we clear this all up, get rid of some of this stuff, clean up the charts. Could even get rid of this for now. Get rid of this, get rid of this, get rid of this. So the head and shoulders played out as well. You could see, on the downside, and take the distance from here to say here. Everything was negative over the last couple days, and we just turned positive. So you take that breakout from the neckline, we pretty much, you can argue that we didn't get as far down actually, because the neckline would be somewhere around there. So we didn't actually get there, but it did break down. So depending on how you set your targets, you might have taken a profit. So let's get rid of this. Let's get rid of this. All right, so now we can kind of see that there's a range-bound area that Cardano has been playing in here. There's a double top up here, and then if you bring this down, you can kind of see that it's been going in between these two. So at a higher time frame, that's just going to mean that when it finally comes time, this is a consolidation range. It's consolidating in this range, and when the breakout occurs, that just means that this is going to be the new base. So when prices pump up again, when it comes back down, there's going to be a lot of price action in the middle here, which will give it support. Like really when you talk about support, you want to come down to like something like that. These are all wicks. That just means that there was a push higher, and then by the end of the day, it came back down. But you can see at the peak in the valley here, if you touch as many peaks of this right here, that's pretty much the range that we're in. We're in a $1 to $1.47 range. So, but we can also see here is that there's another little mini trend line, that's formed here. That's broke out. You can argue that this might be another one that's forming. Yeah, I mean, other than that, again, you could draw from here down as well. It's kind of expanding wedge. So I guess right now all I would say is if it comes down to this lower level, that would be a good entry, and if it breaks out above here, would be the entry, for sure, because that would be price discovery. So zoom out a little further. Yeah, I mean that's all I really see here on Cardano right now. There's really no patterns. There's nothing really going on here to suggest that there's a trade to be played. The only thing I would say is if it comes down to this lower range, it seems to have been support many times already. So down here might be a good entry. So that's it for Cardano right now. Not sure. I keep. There we go. Hang on one second. All right, sorry about that. Nature called. All right, so on the daily time frame, we could see the consolidation range. You could see the downward trend line here. You're gonna wait for the break up. If you are a shorter time frame trader, we could drive down a little deeper into the 4 hour or even the hourly. But you can see, there's certainly a downward trend here. Get down to the hourly. You could kind of just see the same kind of thing here. I mean, you could see a little bit of a triangle formation happening here, but the lower you go on a time frame, the less the patterns hold up. So I'd be more willing to trade on the higher time frames than these lower ones. But you can see here that there is indeed a triangle here, which the breakout, if you look at this breakout here, from the peak to the low, the target would be, you'd be breaking past this trend line, which would be good because then you'd have the breakout of the next one. So you could actually trade this if you see a breakout above or below, these levels. Certainly consider, the previous peak here as one of the levels. Let's color this up correctly. Before I do that, let's make a copy of this for the low side things. Let's go with green. All right, so that's the first range, which equates to this previous high. Then if you take, you go up here, basically at this target, you could see that it's coming close to this previous peak here. And then of course you got this this trend line to battle too. So that's really the three areas. Depending on where it breaks out, just consider this trend line, this previous pivot on the A here, and then of course the pattern target, and also the resistance that you could see over here. So there's obvious resistance here, right? So it kind of falls kind of in line with the target of the pattern. On the downside, again, same kind of thing. You're gonna want to consider this B pivot as an area of price taking. Then we could look down here on the low end and see some obvious support and resistance happening. This seems to be an area right there, somewhere like that. And lower than that would be that. Let's get rid of this. It's too far away to worry about. So this is the immediate areas. Kind of 3 areas of possible sells, closing out of your trade. Of course, the pattern target, and then there's, that 4th one down here with this resistance. But again, I'm not taking any downside trades. I wait for the upside trade. So if it breaks down, that's on, you guys choose your trades. This is the pattern. You're waiting for the breakout of this little pattern. And then on a larger scale, you're going to look at the 4-hour. You're going to look to see if this pattern breakout actually makes it break out on the higher time frame. Then you'll have another trade that you can take that would you would go for, a target of something like this, the width of this channel. Then you would put that somewhere up here, depending on where this breakout happens. Actually, the triangle pattern is going to force it to break out before there, so somewhere around here maybe you'll see it. And you can again you can kind of see it going back to possibly the previous high here. That could be a target for your another one right here. You see that resistance area right here. Oop. Right around there. Some resistance right there. Some resistance back here. So on the higher time frame, if it breaks out of this channel, these are some areas of possible closing out some of your trades. Remember to use the proper risk management. As the breakout happens, move up your stop loss. Make it at least break even as soon as possible, especially if it breaks out of this one. You could bring your stop loss if you're playing this little triangle and it actually breaks out of this larger time frame pattern, this trend line, then you could very easily put your stop loss here, which will guarantee you a profit from your pattern breakout trade that you did back here. And then you're hoping worst case that the price will come back after this breakout, check this, and then go higher. And if you have your stop loss down in here below this trend line, you should be okay. You shouldn't get stopped off. And if the price doesn't respect this trend line, then you do want to get out and lock in your profits and not make it a losing trade. If price action for some reason decides to turn and come down and go down this way again, you want to get out here, which is going to be ideally a profitable trade for you. If you brought it up in here and your trade entry was here, then you guaranteed yourself at least a break-even trade with no risk, and leaving it open for the upside to take a little bit of a sale, get out of your position here and get out your position a little further here, and then you can leave the rest to ride higher up if you want. So that's all I see for Cardano. Let's move on to Bitcoin. All right, so this is where we are now. When we were doing when we did the video the other day, price action had not come down and touched this area yet. So I had mentioned that I believe that the 50,000 would be the support that would hold, and it looks like it might have turned out to be that way because it did bounce. It came down to 50,300, so it stayed within our range here that we had, and it bounced off just like we kind of considered it might. So it hit the first target, it hit the second target, it didn't reach the third. So this pattern breakout I would consider complete. So let's go ahead and just clean up the charts again, get rid of this stuff, and set up for the next trade. So ideally now we're going to start seeing some more bullish. The futures and all the things that were closing last week happened, and all the weakness seems to be happening prior to that day now as opposed to on that day. So just keep that in mind for next month, and when the things expire again, you know, we're seeing it happening earlier on and not waiting for the day of the closure. So I think people are closing out their shorts and, you know, hedging their bets earlier than the last day of the futures lately. So let's just zoom out to the weekly just to clean up some of this stuff. And we can go back in. All right, so on the weekly, oh my God, look at this. Still pretty crazy, the way we're moving up here. Just going to get rid of some of this stuff. These are just previous things. Now, again, guys, when you look at this chart, you know, I mean, things go up, things come down, things come up, you know, little peaks and valleys here, down, down. You know, there could be a point where this retraces a little further. So just be very careful where, you know, if you just take this as the pivot, I mean, we could see it come down to 40,000 again. I mean, on a weekly basis, you know, Fibonacci. I mean, let's see what happened here. You know, it touched 23. It didn't make it down to 38. This time 23. Seems like 23 might be the number. This one went a little deeper. So 23, I mean, you know, looks like we hit it there. And we almost hit it there. So 23 to 25 seems to be what's the latest and greatest in terms of retracements. And that's probably because it's being propped up so much by all the institutional investors, and people just continue buying the dips. I mean, if the target's 150 to 300 Bitcoin by the end of this cycle, then, you know, this is a sale price, right? I mean, if it can double, if it could double or triple from here, or on the high end 5x, I mean, smart money is buying. And but you can kind of see how you've had the retracements. And it went down, went up, came down, touched the 50. Really, if this is the, yeah, so it touched the 50 here, you know, went up, came down, touched the 618. Look at that, to the tick. Look, see how that touched that? So now I would say we've retraced off of this 65, and now we're looking to move up. And from just the simple Fibonacci extension, you could see here that we have an algo target up here of 66. Right? So, and then if you do the extension, you do a 1-to-1 extension or something, you know, close, just assume 1-to-1. And you got a 69. Now again, I'm kind of drawing these wide, but get the idea where it's also a little funky because of the let's just double check. All right, so that's a 1-to-1. So for sure it's going to go there. I mean, the extensions usually, honestly, it usually takes you all the way up to here, between these two ranges. And that's the 78 to 80,000 range. That's with the fib extension. So let's get rid of that. So we got some targets there. Let's double check that retrace algo target of 23. Let's just move that down a little bit. All right, so we got some intermediate targets here from just fib retracements and extensions. You could also see on the there's another pattern showing up here on the 4-hour that I want to just kind of throw on the chart here for you. It hasn't completed yet, but it could allow you to kind of see where things could be headed. It's a very weird pattern here. It's it's called the cipher pattern. It has a target of 59. So this is where it could go in the short term if this pattern completes. So you can see the upward momentum that these patterns or harmonic patterns are showing. So, you know, depending on where you are with your trades, you know, there is a somewhat a bull flag happening here as well. Probably cleans up a little bit if you go higher. Yes, you could see that. You could see that this is a pretty nice bull flag. Actually, it might be breaking out already. It's not exact. But you could see how this can be considered a flagpole. Wow, look at that. It matched right up to our 65. So that's pretty cool. Well, we got some targets here. The breakout, you know, on the daily chart might have already happened for the bull flag. But if you come down to the lower time frames, even there you can see the breakout might have happened already. You know, initial target, if you're already in a trade, you can consider this harmonic pattern target as maybe one of the ones it's kind of matching up to some of these peaks here, previous highs. Of course, there's this one up here, you know, this previous high here. Then you got the pattern breakout targets, you know, when you go back up to the 4 hour. So if you're in a trade, you know, this is where you can consider scaling out of your trade. Again, just remember, you know, this has been a nice move up. Wouldn't be surprising to see it kind of take a little break here and do a little bit of a retrace. And you can see the little retrace that happened here, went down to 23, kind of found support. So, you know, if you're looking to get into a trade, maybe you're going to wait. See, this 23 lines right up to this line here. You might want to wait for the check of the breakout. So it broke out. You know, maybe now you wait for there to get into the trade, and then you got these targets. You know, if you get in here, you can consider getting out on some of these. This would be the target of this fib retracement. So algos are going to push it up to here. And then, of course, on the higher time frames, you know, once you got that check and go, then you got this pattern target that's up here. You got the previous peak up here. So these are some of the areas, you know, some of these green areas where you can consider getting out of a trade. So if I were considering taking a trade, I already have my position in Bitcoin. But if I were to take a trade, I'd probably be waiting for it to come back and check like the 55,000 level before entering. And then from there, you know, you can consider getting out on this algo target. getting out at this previous this D target from the harmonic pattern, getting out up here, which is the previous peak of the price action at 61. And then finally, you know, if you have some left, you taking out 25, you know, maybe you have 25% left, then you wait for it to come up here. I think I've heard a $60,000 price target for Bitcoin on other channels and other people talking about it. So it kind of lines up with this harmonic pattern. So just don't be greedy. Do your trades. If you're using leverage trading, make sure you use proper risk management. Well, if you get in here, you can certainly put in your stop loss to be a little bit below this this trend line to kind of guarantee yourself if things go south quick, you get out, but you leave it for upward. And then as you're scaling out up here and you start seeing, you know, checks like I always say is going to happen, you can start bringing your stop loss up higher. You know, if it comes up here and then comes down and goes up, then you could bring your stop loss higher, all the way up. Just keep riding it. Well, this we're down here. You would assume it would come down a little further, and you would put your stop loss there. So let's just extend these a little bit. All right, so we got this drawn up. This is it's already breaking out. So just wait for the little bit retrace. Make sure it's checking the level. Make sure it's confirming that it's going to stay above and it's not going to turn around and go south. You know, and once you start seeing it bouncing back off of here, you know, then you can consider getting in. You can start, you know, you can get into a trade, start DCAing in down here, you know, build your position once it bounces off, and then as it comes and it checks, you can consider adding more if that's what you want to do. I do see positive momentum in Bitcoin. I really don't see it crashing and burning, but it could very easily come back down to 50,000 again. I don't know if you guys entered on any of those trades or you bought some down here, but could very easily do that. Everyone's believing it's not going to, and I think, you know, we're assuming it's going to hit the 61 and even break through and go to 66. So that's it. That's it for Bitcoin. Next one, let's look at Ethereum. Ironically, it's still in its triangle pattern on the daily level. So really, we can't do. We're not doing anything yet. We're still waiting for it to make a move here. So just kind of sit tight and wait for that to happen. On the daily, there is a pattern that's arriving here again. Where are we? Cipher. So it's and it kind of marries up nicely with the 2600. Let's see when it's saying 28th. So this is also saying this will happen by the 28th. So this coming, well, that's where it's set. That doesn't mean it's going to happen there, but basically, though, the important thing is that it's saying it's gonna hit 20. It's hard to put the exact number here, but it's basically 25.99. Let's go a little lower. So that's where it's saying it's going to be, and this breakout of this pattern kind of marries up with that. So kind of makes sense. So just wait for the breakout. Just set up your possible sells, which would be the previous all-time high. You know, we're gonna see some resistance at 1740, which it's very close to going there now. This is the important thing. When you go down to a lower time frame, you can see that the reason why it's important is because it's a previous peak. So if we could break above this level right here, the trend is back, higher highs. That's what we're basically looking. Once it breaks above here, we get a higher high, and hopefully we have a higher low, and then we start moving back up. And again, this is going to be the next level that we're going to want to break. So we got some hurdles to get to before there's a breakout on the triangle, but that's where that stands. And then the other thing you could do, again, when I talk about these patterns, you can use these harmonics to throw down a pitchfork. You go from the X to the A, and you could kind of lay out, based on current price action. Touch the C. Yeah, that's pretty good. Alright, so you got the pitchfork laid down. You could see how, if the price action follows it, that'll be good. Then you could also throw the negative one down. Although I'm not a very negative person, you have to really consider both sides here. And you could see right now, there is some rejections happening on this lower one. So again, this is going to be another area right here where price action is going to have to decide which way it's going to go. Either it's going to follow the upward path or the downward path. So next couple days, we'll see what happens there. This is where you might see either a breakdown through this triangle pattern if it decides it's going to follow it down, or you might see momentum going upward to break out of the triangle on the upside. So that's what I see for Ethereum. Certainly it has recovered from its weakness. Let's see what, just for the heck of it, let's see what the retracement looked like. So you take the retracement from here to here. Yeah, look at that. It touched 618 almost exactly. It actually missed it by a little bit, I think. Yeah, see, it missed it by a tiny little bit, but it was pretty damn close. Certainly, 0.55 had some reactions going on, but it missed it just slightly. So it didn't actually get to 618, but again, if you were considering dollar cost averaging, you would have been dollar cost averaging somewhere in this range right here. So you would have got into a nice position for this bounce in that area. So I'm going to remove this Fibonacci. I'm going to remove this because it's already done. Either you're in it, and now you should be just waiting for this breakout. If you got in here, that's great, but now you should be waiting for the pattern breakout. And we could see what's going to happen. This next candle tomorrow is going to be on this cross, so we'll probably see some price action start happening here, because when two of these fib lines cross, there tends to be some good action going on. So let's see what happens here. Let's just leave this chart here. Right now, like I said, you're waiting for the breakout of the triangle. If you played the retracement on this price action on Ethereum, you could have got in down here. Getting in on this bottom trend line if you're a bull is not a bad idea. It's a little riskier because you don't really typically want to trade inside a pattern. You want to wait for the breakout. But this is a high time frame pattern, so there's certainly on lower levels there was probably more opportunities for you to see and get in here. This ended up being a head and shoulders. We talked about that the other day. This was confirmed a head and shoulders because it broke down. And you take the from there to the neckline. That's basically the neckline. It hit it almost exactly. Look at that. So this was a successful head and shoulders if you guys played the downside. Again, like I've said many times, I'm not a person that does negative trades on crypto. I do it all the time in Forex, but in my mind, I just can't go negative on crypto. I'm just a bull. So I lose out on the downside trades. But, you know, if you go with the idea of you trade the trend and not against the trend, you really shouldn't be trying to short things in this. You have a higher probability of success if you follow the trend rather than trying to counter trend trade, which is, in my opinion, not a smart thing in crypto. In forex markets, it's a lot different because you got the big banks coming in and changing directions of markets whenever they decide they want to change things. So the ups and downs are very fluid and typically happens. They usually trade in ranges. So, you know, when it starts getting a little too heated, they bring the money in and they bring the price back down. So it's a little bit more manipulated in terms of big money coming in. Although cryptocurrency is very manipulated right now as well. But if you want to be safe, you really want to go. If you want to be safe and if you don't use risk leveraged trading, trading with the trend is your best bet, because even if you get in at a wrong time, if you believe in the coin and you believe in it's a bull market, chances are even on a bad entry, in the longer term you're going to be okay. You could dollar cost average your position down lower. You can repair your mistake a lot easier if you're trading the trend. All right, so next one, Chainlink. We do have a pattern developing. It's still, again, this is the same kind of situation. We're still in this triangle. I'm going to get rid of all this. I'm going to leave these targets because these targets are still legit for this pattern. So we'll leave that there. It's still staying, you know, it stayed within. We still have these targets that we've talked about the other day. You know, downside down to 11, which would be crazy. Got these intermediate targets here. Again, this is on the log chart. That's why it looks kind of lopsided. If you take this off, you can see, you know, it is symmetrical. Actually, it's not too bad. We could leave it like this instead of having it on log. All right, so what I want to show you here is on the 1 hour. So we got this triangle. This was on the daily. On the 1 hour, we have a little mini pattern showing up here on the D, I believe. That's actually there on that peak. So let me zoom in a little further. Gotta go back down on that. All right, let me fix this one down here. Okay, so this is a bat pattern. So again, this is not a complete pattern, but you know, we can throw these pitchforks on here again and kind of see where it might be headed. This is kind of nice. It looks like it's I kind of missed. You got to make a kind of a decision there if you want to cut them a little bit. They missed this one right here, but really you got some nice touches right there. So that's really where I would put it. And then the other one, you know, you could throw on here C to the anticipated D, and then kind of just you don't know where that's happening yet. So to me, it actually doesn't make sense to even have this on here yet. We could leave that there. XCD is usually the other one that you do. We could leave it there and we could see what happens. Yeah, because this pivot didn't. The second pivot didn't even occur yet. So this isn't not even a real pitchfork yet. It's just based on the XCD pattern of this harmonic pattern. You always throw that pitchfork on there, and then the other one's the XA, and then the best fit. And we touched as many as we could here. So that's the reality. So within this larger time frame triangle, these pitchforks will allow you to kind of see where price might, you know, trend. So it might follow this upward going pitchfork up. It might get a little bit of resistance on this that didn't even occur yet. This is an anticipated pitchfork, so we could see if there's some reactions that are occurring even before it actually occurs, you know, if you know what I mean. So you can see a little bit of touches already there. So you're going to see probably as price action moves up, you're going to see some resistance on these downward facing ones. But before this pivot is locked in, this isn't a real pitchfork yet. So it's just kind of anticipating what could happen after D is hit. Right now, X to A is the real pitchfork that should be followed. So maybe we'll see, let's go up to the higher time frame again. What we can take away from this is that maybe at worst case over here, if it's going to follow the upward going pitchfork, we'll see the breakout happen over here. And if it's going to follow the downward going pitchfork, we could see something over here. But really the make or break decision on the downward one would be here. So it could kind of stay, you know, it could not follow this upward one and just stay within this pattern. But based on this D, if this D, you know, the D, if it's not a breakout, is going to be a little shorter. But if it follows the downward pitchfork, then there's got to be a decision made over here if it's going to continue to follow this downward pitchfork or continue going up. So it's just, these are just kind of an, you know, guesses. Really what you're doing is you're waiting for this breakout either to the upside or downside. But this kind of gives you maybe like a little bit more insight of how price action could actually go about getting there. You don't have to overcomplicate it, but this is, you know, I like throwing these on here because you can kind of see, you know, when things are reacting certain ways. Like right here, if you really want to tweak this a little bit, you can tweak it so that, you know, you got that touch there, and then you can see there's a touch there. It's really interesting to see how these touches really come into play here. You know, then there's a little wick below it, but it came back up. Little touch there. It missed it slightly here. And again, this could be broker reporting of numbers issues. So it's not perfect, but it gives you a kind of a roadmap. So again, as always, you're waiting for the breakout. Do not take trades within a pattern. All right. This actually looks like a reverse head and shoulders. If you look at this, I just kind of saw that right now. You got this right here, you got this right here, and you got this right here. So let's just kind of quickly we'll throw a neckline here, which would be right about there. Then you take a measured move from the neckline, from this peak up to the neckline, and you put that on the breakout. If it breaks out here, then this is the target, which would break us out of the pattern. So keep an eye on this. It might coincide with the larger picture breakout, but certainly the target for this head and shoulder is up here. And then you got that breakout here, so you might see price, you know, come up here, come down, check, and then go. So it would hit this target for the head and shoulders, and then when it breaks out and comes down and checks, then you can put your stop loss here, and then you're good. then you're going to wait for the upside targets. And we have some here already, and then, you know, on if you put this back to log scale, and you kind of see how this is kind of nice too, because it falls right into the pitchfork. So basically, bottom line is we're looking at like a $45 if you take the average over here, $45 link price if this pattern breaks out. All right, so that's it. That's it for this video. I hope you guys understand the thought process here. You gotta make sure you practice these things on your own to put these on your charts. Even if you just kind of like fake it and say, all right, I'm buying here, and you document it, you know, time, day, or you put a little mark on your chart saying I bought here, and just say I think it's going to go here, and just start practicing. See if it actually follows through what you said. I mean, we come back here and look at the last video. Let's just take a quick look at Ethereum. So Ethereum, it was still inside the pattern that we just talked about. Chainlink, again, it was still in the pattern. So we're kind of like, we're still in the same boat here. It's just that, you know, we're a little further down into the pattern. So no trades yet. Wait for the breakout, and that's all we gotta say about these four. So we'll come back and check to see what this looks like in a couple days. See if our pitchforks have been held to, our targets have been hit, or what's happening, and then we could kind of see where maybe we misinterpreted something. You know, maybe there was a manipulation that came in. Maybe there was an event that caused something that kind of threw the TA out the door. But again, regardless of, take the trade after the breakout, follow proper risk management, follow the stop losses, increase your stop losses, make it a break even as soon as possible so that you have no risk. If you really want to be conservative, don't do leverage trading. Use money you only have. Follow the trend. If you do a trade, you get your entry in the wrong spot. As long as it's a good crypto and you believe in it, you can cost average your position over the longer term, and in the longer term you'll do fine. It's just maybe you'll have some pain in the short term if things go south temporarily, but if you believe in it, you know, if you're trading the trend and you cost average consistently, you'll be fine. All right. So with that being said, please consider subscribing to my channel. Click the little bell. When we get to 2,000 subscribers, we're going to do that giveaway on crypto. So please, you have to be a subscriber to participate in that giveaway. And also you'll want to know that the video is coming out. So by subscribing and clicking the little bell, you'll get an alert saying that that I put out a new video, and you could look at the title, and you could basically, I'll make it very obvious that it's the giveaway video. So consider subscribing. Again, it's a long video, but if you've watched this far, if you want to go back and you want to find specific areas, look in the description and you'll see timestamps to make it easy for you. And until next time, have a great weekend and look for my next video. Take care.